For a country that is absolutely obsessed with gold, India barely mines any of its own. It's a huge paradox. But after 75 years, that's finally starting to change. And to understand this, we have to dig into the one question that has haunted India's gold policy for decades. Why on earth did it take so long for private mining to open up? For three quarters of a century, if you were a private company, large scale gold mining was pretty much a no go zone. But now, the Jonagiri gold mine in Andhra Pradesh is on track to become India's first major private gold mine. To really get why this one mine is such a massive deal, first you need to understand the scale of India's appetite for gold. Every single year, India imports somewhere around 800 tons of gold. I mean, just think about that number. It is staggering. It represents a colossal outflow of foreign currency. We are talking about billions of dollars. So that's the demand side of the equation. And this is the supply side. India's own domestic production is a measly 1 to 2 tons a year. The gap between what we want and what we make is just vast. This is the direct result of a very specific, long held ideology. To understand this, you have to rewind the clock all the way back to 1947. India's entire economic model, right after independence, was built on one core idea that the state, not private businesses, should control the nation's most vital resources. Now, this way of thinking was hugely influenced by something called Fabian socialism. It's a philosophy that pushes for a slow, steady, and democratic shift towards socialism. It leans on reform instead of revolution. For leaders like Nehru, who was the first Prime Minister of India, this was the perfect middle path. You could have a mixed economy where the state held the rights to things like steel, energy, and mining. This really captures the entire belief system of that era. Minerals weren't just a commodity to be sold, they were seen as the nation's collective wealth. They had to be guarded. The logic was pretty straightforward. If private companies are in charge, they are the ones profiting from the nation's treasure. And when it came to gold, the government's worries went way beyond just profit. You see, in India, gold plays three different roles all at once. It's a cornerstone of our culture. Think weddings and family savings. It's a financial center. It's a haven for millions. But it was a third role that really kept policymakers up at night, its impact on the whole economy. With foreign exchange reserves often being fragile, every gram of gold that was imported meant precious dollars were leaving the country. This created a deep seated fear about gold's economic power. In fact, this fear was so real that in 1968, the government passed the Gold Control Act. This law restricted regular citizens from owning gold bars and coins. It was a drastic attempt to stop what they saw as a major economic leak. Now, that act was finally scrapped in 1990 as the economy started to open up, but that state control mindset, it stuck around in the mining sector for a lot longer. So, when the state took charge, it actually created a vicious cycle that led to the near total collapse of India's gold mining industry. And the story of the Kolar Gold Fields, or KGF as it's popularly known, is the perfect example of this failure. After being nationalized, it produced almost all of India's gold. But without any competition or private investment, the technology just got older and older. The costs skyrocketed as they had to dig deeper and deeper for ore. And eventually, productivity just tanked. By 2001, the legendary KGF was officially shut down. And this chart right here shows you the result. After KGF closed, India was basically left with just one mine, that is the Huti gold mines in Karnataka, producing gold, whose production is next to nothing when you see the gap between what we use and what we produce. But as it turns out, failed government policy wasn't the only problem. India also has a major geological hurdle. See, unlike places like Australia, where you have these huge, relatively easy to access deposits, India's gold is really tough to get to. It's buried deep underground, it's scattered all over the place, and it's in low grade ore. What that means is that exploration is incredibly expensive and super risky. You could spend years and millions of dollars drilling holes and find absolutely nothing. And this geological risk, combined with the fact the government wasn't investing in exploration, created a powerful loop of inaction. Think about it. With no one exploring, private companies had no data to even guess where gold might be. No data meant no new discoveries. No discoveries meant no investor was ever going to be interested. And with no investors knocking on the door, there was no political pressure to fix the broken policy. Even when the sector was opened up in the 90s, The fundamental incentive was completely broken. Just imagine you spend millions of your own money to find a buried treasure, and the moment you find it, the government steps in and says, "Great, thanks. Now we're going to auction this off to the highest bidder." You took all the risk, but someone else could just swoop in and get the reward. Of course, no one was going to take that bet. It just didn't make any sense. It took decades, but eventually India began to untangle this mess. A series of modern reforms, especially in the last 10 years or so, have slowly chipped away at that old system. Through changes to the Mining Act, the government brought in transparent auctions. They allowed 100% foreign direct investment, and they created special licenses just for exploration. These changes started to build a little bit of trust and create a real framework for private investment. Among all of these shifts, one reform really stands out. The one thing that fixed the fundamental broken problem of risk and reward, and that's called the composite license. A composite license bundles exploration and mining into a single package. It's a promise from the government that says, hey, if you take the risk, if you spend the money to find a deposit, then you get the first right to mine it. It directly connects the risk to the reward. And that finally made gold exploration in India something worth investing in. So, with these reforms finally in place, projects like Jonagiri are becoming a reality. But we need to be really clear about what this new mine actually means. It is not the solution to India's huge gold import problem, not even close. What it is a signal. And this table just lays it out perfectly. Look at these numbers. The Jonagiri mine is expected to produce about 1 ton of gold a year. India imports 800 tons a year. This mine's output is just a drop in the ocean. So its real value isn't in the gold that it's going to pull out of the ground. The mine's real importance is symbolic. It's a powerful signal to the world that after 75 years, India is making a major shift in its economic philosophy. It's moving away from that old model of absolute state control and towards a system that trusts private capital and private expertise to unlock the nation's resources because the incentives finally make sense. So, to wrap it all up, why did it take 3 quarters of a century? It was really this perfect storm of four big factors: a deep ideological distrust of letting private companies manage national wealth, that constant economic fear of gold sucking out foreign reserves, a massive overestimation of the government's own ability to do the job, and most critically, that completely broken policy that split the risk of exploration from the reward of mining. Fixing all of those problems took decades. The Jonagiri mine is the very first fruit of that long, difficult process, and it leaves us with a really important question for the future. Now that the policy gates are finally truly open, could India's next gold rush be hiding deep beneath our feet, just waiting to be discovered?